Guys, I'm back with another portfolio update, and we have a lot of news to cover today. And just wanted to give you guys an update over my strategies and just my portfolio in general, how it's doing with these volatile times in the market with all the news that's happening, right? So first, Robinhood. I'm down on the month and whatnot just because, I think it's mostly because of the coronavirus causing the market to droop a little bit. But I'm not too worried. I just see it as a bit of a buying opportunity. When the market's cheaper, everything's on sale. But overall, I'm up, and I'm treating this, as my Robinhood bank account. It's gonna have the majority of my like liquid cash in it, and I'm going to be basically just buying one stock, and I'll get into that in a little bit. I'm also implementing a new strategy of selling cash covered puts, which I will have a video over this week actually on my strategy around earning weekly income through cash covered puts and covered calls. I think those are two strategies that's really hard to lose on, and it's a great option strategy for beginners, even with Robinhood, right? So even with new accounts, and if you want to treat it as your savings account, selling options are a great way to just earn a little bit of extra income on pretty safe bets, really. In one finance, I'm almost at 5,000. I would be at 5,000 if the market didn't go down the past couple weeks, but I can't change the coronavirus or anything like that, so that's what's happening. I have changed things around. As you can see, there is no fund pie anymore. I took that out, and what I've done is in each of these, okay, I have put in the corresponding Vanguard suite ETF, right? So this is the Vanguard REIT ETF, which tracks the entire REIT market, and I put that as 10% for every single pie. So if you do the math, for every single one, I have a Vanguard ETF, right? So every single one, here you go, at 10%. So that means that my portfolio is 10% in funds, if you will. It's 10% in these large ETFs that track each of the corresponding sectors, okay? But I wanted to be able to allocate accordingly how much I wanted in each sector, right? I want more in real estate, healthcare, utilities, telecom, because these are sectors that do well in a recession. They do well in a crash. They bounce back quickly. Tech and industrials and consumer cyclicals, these are sectors that don't bounce back as fast in a crash. They drop a lot more. And I want this portfolio to be relatively safe and recession proof, right? And again, the whole principle behind this portfolio is I'm treating it like a house, right? So the more money I put into it, the more rent I get out of it, and that the rent is in form of dividends, and I want to get paid dividends as much as possible and as quickly as possible, really. And it's just a slow process of just earning this dividend income where I can just sleep and earn dividends. So what gets me really excited is this earned dividends down here, not necessarily market gains for this particular portfolio. However, for my Robinhood, I am investing in uh, the majority into this one stock. It is an ETF. It is an ETF that tracks the market, S&P 500. Pretty boring, I know. But what I really like about this ETF is that it has a little bit higher dividend than SPY. It's SPY is SPY. It's the S&P 500. It's the Spider and the SPDR ETF that tracks the market, and it has a little bit higher expense ratio at about 0.1% and a little bit lower dividend yield at about 1.6. Currently, VOO, which is the Vanguard S&P 500, has a expense ratio of just 0.03 with a dividend yield of 1.86. So I'll take a little bit higher dividend and a little bit lower expense ratio for the Vanguard ETF, right? So that is why I chose the Vanguard ETF rather than the SPY or whichever S&P 500 index you want to choose. I chose the index because it is literally the safest, one of the safest equity positions that you can buy. You can hold it forever. I'm treating this as my savings account. Remember, I want to be able to basically sell out of this position and convert everything to cash as quickly as possible, because this is my savings account, right? This is my investment account where I don't plan on selling, and this is my savings account that just puts money in the stock market. So it is an investment account, but how I'm looking at it is a savings account. And it's a savings account where I have about 80% of my money in the S&P 500, and I use 20% of my money to buy and sell options here, or actually mostly just sell options. What's really cool about Robinhood is that, yes, I only have $650 in cash, but I also have about $900 being held, or $800 being held for my cash covered put option. And so that's actually earning interest as well. So it's not just $659 earning interest with the 1.8% at Robinhood, it's also my $800 earning interest. So while my $800 bought this cash covered put, and again, I'll go into cash covered put in another video. It would be too long if I went in this video. So just look out for that here in a couple days. But if I, my $800 that I have to sell this cash covered put that Robinhood has in collateral is actually earning interest as well as my just free cash, the 1.8% that Robinhood gives you. And I also earn my premium that I get for options. So this is just earning more, basically more interest and just more money on cash that I'm not using right now. So that's my overall strategy there. And I wanted to talk about, of course, the coronavirus. The World Health Organization called it a global emergency. People are calling it a pandemic. But the flu rate, the flu kills about the same proportion of people, especially in less developed countries that don't have as big of infrastructure for healthcare, don't have as good a healthcare as the US or other countries. But I don't really see this as a huge emergency. Yes, it's very contagious, but I don't think it's going to be killing people, you know, especially in the US. It might make you sick, but is it going to kill you? Probably not. So I don't see this as like a pandemic or anything like that. I mean, yes, it's scary and bad, and it's not a good thing to have, you know, in your country that doesn't have a lot of healthcare infrastructure. You know, they're building 2 hospitals in 10 days, which I don't think they're going to be hospitals. I think they're going to be more like concentration camps, you know, keeping all the infected in one area and seeing who lives. It's terrible what they're going to do, but can't control other countries, you know. So that's what I think. Is it going to affect trade? Yes, it's going to affect trade. Is it going to affect the global economy for a little bit? Yes, it's going to affect global economy, but is it going to have any long-term impacts? Is it going to have, is it going to make any of the companies that I hold go bankrupt? No, I don't think so. I don't think it's going to affect them that much. So am I going to sell? No, I'm not going to sell. Just gonna, when other people sell, I'm going to buy. So that's what I've been doing. And I bought a couple of shares of S&P 500 when it was low in Robinhood. And of course, I just have my automatic deposits for M1 Finance going twice a week. So I'm putting about 150 in here a week. Okay, so now why did I choose the S&P 500? Why did I you know, just choose this one ETF that tracks the market? Well, I take words of wisdom, you know, from Warren Buffett here. He says what he's going to do with his billions of dollars when he dies is put 90% of his money into the S&P 500, and he's going to put 10% into government issued treasury bonds. So government issued treasury bonds earn a rate of about 3%. maybe a little less right now. And that's basically secured money. You're buying bonds from the government. So it's as secure as the dollar bill is secure. And then 90% of his money in the S&P 500. That's because the S&P 500 is pretty much guaranteed to go up roughly 10% every year, if you look at a long enough time span. In fact, once if you invest in 1 year, if you look 11 years from then into the S&P 500, if you look 11 years from that point, you are guaranteed to make money out of any point in the future. So if your time horizon is 10 years out or more, the safest investment you can possibly make, that is an equity investment, is the S&P 500. And earning 10% on any savings account is completely unheard of. Even bonds, it's really hard to find. You really can't find a 10% yielding bond. So that's why I chose S&P 500. That's where I plan on putting roughly $5,000 of my Robinhood account into the VOOO, and I'm going to be using the rest to sell options and earn that free interest that Robinhood gives me for just having cash in the brokerage. This is going to be my savings account. I hope to have this, hundreds of thousands of dollars at one point or at some point, selling cash covered puts, selling covered calls. When I'll explain the cash covered puts and covered calls strategy to you in a little bit. It's called the wheel. I'll have a whole video dedicated to it and why I like it, and how I'm going to use that to kind of supplement my dividend income. So instead of so I haven't sold these stocks, right? Because the market's been in a little bit of a slump from the coronavirus. But all these dividends that I'm getting, right, from Stag and Centerpoint and stuff, I plan on supplementing that income by selling options. Okay, instead of having them in stocks, I'm selling options, and I'm going to have the safest investment possible, which is VOO. Everything else is going to be gone. I might keep a little bit in bonds. I don't know, just because. So that's my plan, and I will continue to update you guys every 2 weeks. I am going to be putting out an options video here soon. I'm getting more and more interested in option trading. You can lose a lot of money, but you can also, if you do it right and you do it safely and you don't get greedy, you can make just a little bit of money, just a little bit more than dividends would give you from stocks. But I choose the route of diversifying and putting money in both options and stocks, as well as dividend stocks. So I have kind of three things going on. So that's my portfolio update. I will update you guys soon with an options video here this week. So look forward to that, and I'll see you guys next time.